On the 20th of January 2025, Donald Trump returned to the White House with a promise that sounded simple: control Venezuela's oil, restore American energy dominance, cut off funding to Nicolas Maduro's regime. Within days, his administration began mapping out how to seize or redirect one of the largest petroleum reserves on the planet. But what looks like opportunity on a map becomes something far more complicated underground. Venezuela sits on 303 billion barrels of proven oil reserves, the largest known deposit in the world. That number alone explains why Trump sees it as strategic, but there is a gap between reserves and reality. In November 2024, Venezuela produced just 860,000 barrels per Dalton Y. That is less than 1% of global output. In 1970, the same country was producing 3.7 million barrels daily. Something broke along the way, and it wasn't just politics. The decline didn't happen overnight. It accumulated across 2 decades under Hugo Chavez and Nicolas Maduro, both of whom treated the national oil company, PDVSA, as a political tool rather than an industrial asset. Skilled engineers left. Equipment wasn't replaced. Wells that should have been maintained were abandoned. Then came US sanctions, which cut Venezuela off from the spare parts, technical expertise, and international financing it needed to reverse the damage. By the time Trump took office again, Venezuela's oil infrastructure wasn't just weakened, it was structurally degraded. Trump's team believes lifting sanctions could jumpstart production quickly. Remove the barriers, let American companies back in, and the barrels will start flowing again. That is the theory. But energy analysts who study Venezuela's oil sector see a different timeline, one measured not in months but in years of reconstruction. Scott Montgomery, a global energy expert at the University of Washington, described the core problem. Venezuela's oil infrastructure is in poor shape overall, due to lack of maintenance for both equipment and oil field wells. The decay runs deep. It is not just about turning valves back on. Pipelines have corroded, refineries have been cannibalized for parts, offshore platforms haven't been serviced in years. Even if sanctions were lifted tomorrow, production wouldn't surge. It would require a coordinated industrial revival. PDVSA itself has become a symbol of institutional collapse. Once regarded as one of Latin America's most capable state enterprises, it is now widely known to suffer from corruption and lack of expertise. Many of the engineers and technicians who built Venezuela's oil economy have emigrated, taking their knowledge to Colombia, the United States, or the Gulf states. What remains is a workforce that is underpaid, under-equipped, and politically monitored. Expertise can't be rebuilt with a policy shift alone. The financial barrier is equally steep. Restoring Venezuela's oil production to anything near its 1970 peak would require tens of billions of dollars in capital investment. New drilling equipment, rebuilt refineries, upgraded export terminals. Foreign oil companies, which once operated joint ventures in Venezuela, pulled out years ago after Chavez nationalized their assets. They're not eager to return without ironclad legal guarantees and political stability, neither of which Venezuela currently offers. Trump's administration has floated the idea of using American firms to take operational control of Venezuelan oil assets, either through contracts or outright management agreements. But that raises a deeper question: who would those agreements be with? Maduro still controls the government in Caracas. Opposition leader Edmundo Gonzalez, recognized by the U.S. as Venezuela's legitimate president-elect, is in exile. Any deal struck with one side could be invalidated by the other, leaving investors exposed to legal and financial risk that most aren't willing to take. Oil markets reflected this uncertainty. Prices moved only slightly in trading following Trump's announcement. Traders weren't expecting a flood of new supply. They were pricing in the reality that Venezuela's output would remain largely unchanged for the foreseeable future. The gap between political ambition and physical capacity was already understood. Thomas O'Donnell, an energy and geopolitical analyst based in Berlin, offered a best-case scenario. Under absolutely ideal circumstances, including a peaceful transfer of power, Venezuela could return to peak production in 5 to 7 years. That assumes a functioning government, foreign investment, skilled labor returning to the country, and no further sanctions or political disruptions. It is not impossible, but it requires nearly everything to go right at once. From Washington's perspective, the clock is already running. Trump wants results that can be measured within his term, not a decade from now. But oil infrastructure doesn't respond to executive orders. Wells don't produce faster because a president declares them strategic. The disconnect between political urgency and industrial reality is creating a problem that no amount of rhetoric can solve. There is also the question of what happens if Trump tries to force the issue. If the U.S. imposes new terms on Venezuela's oil sector unilaterally, without buy-in from Maduro or a credible opposition government, it risks triggering legal challenges, capital flight, and further destabilization. Oil companies don't invest in environments where property rights are unclear and political risk is uncapped. The very aggression that Trump believes will unlock Venezuela's oil could instead make investors even more cautious. Meanwhile, Maduro isn't sitting idle. He has already announced plans to ramp up domestic production with help from Russia, China, and Iran, all of whom have remained engaged with Venezuela throughout the sanctions era. Whether those plans are realistic is debatable, but they signal that Maduro sees Trump's interest as leverage, not a threat. If the U.S. wants access to Venezuelan oil, Maduro believes he can negotiate from a position where his survival is guaranteed, not undermined. Up to this point, Trump's Venezuela oil strategy has looked like an opportunity play, a way to expand American energy influence and weaken a geopolitical adversary. But now, it is turning into something far more tangled. The infrastructure is broken. The legal framework is contested. The timeline is longer than the political window, and the risks, financial and diplomatic, are starting to outweigh the projected gains. What seemed like a straightforward resource grab is revealing itself as a multi-year reconstruction project in a country where power is still unresolved and trust is non-existent. Trump is betting he can bypass those obstacles. The oil sector itself suggests otherwise. Energy experts are now warning that any attempt to accelerate production without addressing the underlying structural issues could backfire. Pushing output too fast on degraded infrastructure risks blowouts, spills, and equipment failures that would set the industry back even further. Venezuela's oil fields aren't like shale wells in Texas. They're mature, complex, and require careful management. Cutting corners to meet political deadlines could cause long-term damage that no amount of investment would easily fix. There is also the question of what this does to global oil markets if it actually works. If Venezuela's production does eventually recover, it would add significant supply to a market already dealing with oversupply concerns. From U.S. shale, OPEC discipline breaking down, and weakening demand forecasts in China, a sudden influx of Venezuelan crude could depress prices, which would hurt American producers, the very constituency Trump claims to be helping. The strategy might solve a geopolitical problem while creating an economic one. For now, the gap between promise and reality remains wide. Trump's team continues to talk about Venezuelan oil as if it is waiting to be unlocked. Engineers and analysts who know the sector see a decayed system that will take years to rebuild, regardless of who is in charge. The reserves are real. The capacity to extract them quickly is not. From an investment standpoint, the risk calculation is straightforward. No major energy company is going to commit billions to Venezuela without clarity on ownership, governance, and legal protection. Until those conditions exist, production will stay flat, and Trump's ambitions will remain theoretical. The oil is there. The pathway to get it isn't days or passing, and the administration is under pressure to show progress. But oil infrastructure operates on geological and engineering timelines, not political ones. Wells that have been shut in for years can't be restarted overnight. Refineries that have been stripped for parts can't be rebuilt with sanctions relief alone. The gap between what Trump wants and what Venezuela's oil sector can deliver is widening. Not closing Trump isn't known for patience. Venezuela's oil industry requires exactly that. The collision between those two realities is becoming the story more than the reserves themselves, because the next move won't be a policy announcement. It will be a decision felt across energy markets, diplomatic channels, and inside Venezuela's crumbling oil fields for years to come.